The committee will come to order. We appreciate our witnesses here today to talk about millennials. Obviously, I'm not totally qualified to totally relate to millennials. One of my staff members, who is in my age bracket, said, "You should have me on the witness table because I got 2 millennials living in my house and I can't get them launched." So it's going to be an interesting hearing that we have today, and it's an important one because we're dealing with a generation of people who are very important to the future of this country, and there are issues that we need to talk about. I'm going to give a very brief opening statement. Our first witness, Congresswoman Stefanik, has to get back to the House, and so we want to get to her quickly so we can do that, and then also hear from our other witnesses. The Joint Economic Committee has produced a piece here, and thanks to some very good staff work, titled "Millennials' Slow Start Down the Road of Life." And it talks about the challenges that this generation has in terms of education, debt to achieve that education, unemployment and not finding jobs that match the talents and skills learned in college, stagnant and less promise of career path growth in the job market, delay of marriage, housing issues, not a priority but delayed by debt, and job uncertainty, and looming spending, rising debt, put millennials' futures at risk. All of these are issues, and there are others that we'll be discussing today. I'm going to ask unanimous consent that my full statement be entered into the record, and also if Senator Klobuchar does not arrive, she's asked in a timely basis, she's asked also for her statement to be put in the record. I'll turn now to our ranking member, Congressman Maloney, for her opening statement, and then we will move to introduce our witnesses and start the hearing.
Thank you so much, Chairman Coates, for calling today's hearing. Millennials are central to our nation's economic, social, and cultural vitality. They are the largest generation, bigger than the baby boomers, approximately 88 million people. They are also the most educated and racially diverse generation in United States history. But millennials face significant challenges, in many ways far greater than those experienced by the boomers. Millennials generally have higher rates of unemployment, lower incomes, and more student debt. Many millennials have had no choice but to delay getting married, buying a home, and saving for retirement. These challenges were greatly magnified by the Bush-era Great Recession. The recession was an economic catastrophe that deeply hurt many millennials and will have a lasting impact on them. We have come a long ways since the darkest days of the recession. The economy continues to recover. The overall unemployment rate has been cut in half, and businesses have added jobs for 68 consecutive months, the longest streak on record. Millennials have benefited substantially from this recovery. Unemployment is down and wages are beginning to move up. This year's college graduates will likely enter the best job market in years. Yet significant problems remain. It is useful to compare what millennials are experiencing today to what the baby boomers experienced a generation ago. Many baby boomers with only a high school education could afford to buy a house, raise a family, save for retirement, and pass something on to their children. But most millennials will need a college degree to come close to matching that success and will struggle longer to achieve it. The question is how to pay for it. The real median income for those households headed by a 25 to 34-year-old has fallen by nearly 10% in the past 15 years. So more young people have been forced to borrow money to go to college. The share of household headed by someone under age 35 with student loan debt has more than doubled since 1989. And they borrow more money too, with median debt tripling during the same period. Some millennials will end up paying back loans well into their 30s, 40s, and over their 50s. And because so many millennials leave college with student debt, they do not have the money for a down payment for a first home. Home ownership for those under 35 years old has declined and is now about 2 percentage points below its average in 1994. Young people are even returning home to live with their parents. The Pew Foundation finds that a larger share of women 18 to 34 years old are living at home, 36%, than at any time since 1940, when those statistics were first collected, and the share of men is even higher. I hope we can use the hearing today to not only understand the scope of these problems, but also to focus on solutions. For guidance, let's look at the first rule of medicine: do no harm. Let's start with education. Should we force students to rely on private student loans that are more costly and come with fewer consumer protections? No. The truth is that millennials cannot afford it. What about government spending? Should we slash spending so we have a smaller government that provides fewer services? 53% of millennials oppose that approach. Let's turn to health care. Thanks to the Affordable Care Act, uninsured rates for younger millennials have been cut in half, as those under the age of 26 are now able to stay on their parents' plans as well as utilize exchanges across the country. Should we cave to efforts to repeal the health care law? Of course not. Millennials make up approximately 7 in 10 workers who earn at or below the minimum wage. Should we allow the right wing to block efforts to increase the minimum wage? Clearly, no. Should we privatize Social Security? No, instead, let's come together to pass modest measures to make sure that it will be strong when millennials need it. Should we roll back consumer financial protections that help protect them from predatory practices? Some call this cutting red tape. I would call it dangerous. But it's not enough to block destructive actions that hurt millennials. We must focus on targeted actions that will help them, and I'll mention just a few. We need to make college more affordable by strengthening federal and state support for higher education, making tuition free at community colleges, and increasing investments in Pell Grants. We need family-friendly policies so millennial parents can make a living and raise their children. Let's repair our nation's roads and bridges to lay the groundwork for a stronger economy. If we don't do it now, millennials will pay a very steep price down the road. And let's not ignore what will perhaps be the greatest challenge of our time: climate change. We must fight those who claim that climate change is a hoax. Failing to address climate change would leave an unimaginable burden on millennials and future generations. The challenge facing millennials are real, but the solutions exist, and it is our job to help chart the course forward. Let me be clear and close by saying that it's wonderful to have on our panel a colleague from the House and a member of the New York delegation. So welcome, Elise, and I look forward to your perspective as well as the testimony of the other panelists. Thank you, and I yield back.
Senator Klobuchar, I've already put your statement into the record,
Okay.
but I would love to give you some time to summarize what you have to say.
As the ranking senator, thank you. I'm going to have to leave early, but I did also want to thank Ms. Mishory for being here. She's going to be in Minnesota in mid-November, which we know is the best time to visit, right, Congressman Paulson? And then Representative Stefanik, I know you used to work for Tim Pawlenty, our former governor, so we welcome you anytime. This issue of the millennials, I'm so glad the chair had a hearing on this because we know that so many different issues confront millennials, and I've heard Congresswoman Maloney go through a number of very important issues. I think the savings issue is going to be important as you have more people that are changing jobs in the gig economy, which when I first heard about it, I thought it meant like gigs as in computers, and then I realized you mean a lot of jobs. And with so many jobs with millennials, that is going to be a piece of it. And then as well as we know the student loan costs, paid sick leave and so many economic challenges, but there's also so many opportunities with the economy having stabilized and improving. So with that, I'm going to let we go on with the hearing here, and Senator Blunt and I had agreed to meet with the ambassador from the Congo on some important adoption issues, but I look forward to hearing what happened. Thank you.
Senator, thank you. I'm going to do something a little bit different here. I'm going to introduce Mr. Meyer and then introduce Ms. Mishory, and then have Congressman Hanna introduce you, and the last shall be first. The last to be introduced will be the first witness, given your time constraints. Mr. Jared Meyer is a fellow of the Manhattan Institute. His research includes microeconomic theory. Don't ask me what that is, and the economic effects of government regulations. Mr. Meyer is a regular contributor to several national media outlets. He's co-author with Deanna Furchtgott-Roth of Disinherited: How Washington is Betraying America's Young, published just this year. He'll have a table outside where people can sign up for the book. But you can go to Barnes & Noble or Books A Million and get that book. Before joining the Manhattan Institute, he was a research assistant for political philosopher Douglas Rasmussen. He holds a Bachelor of Science in Finance and a minor in Philosophy of Law from St. John's University. We welcome you, Mr. Meyer. And Ms. Jennifer Mishory, Executive Director and founding staff member of Young Invincibles. That's what some of my kids say they are. A member of the Consumer Advisory Board of the Consumer Financial Protection Bureau, previously served as consumer representative for the National Association of Insurance Commissioners, graduated with honors from UCLA, received her law degree from Georgetown University Law Center, and is admitted to the California Bar. I'd like to turn now to Representative Hanna to introduce our first witness.
Thank you, Chairman. I'm pleased today to introduce my friend and colleague, Representative Elise Stefanik, who serves the 21st District of New York, just north of me. Representative Stefanik graduated from Harvard University with honors as the first member of her immediate family to graduate from college. She is not only the youngest member of Congress serving today, but she is also the youngest woman ever to be elected to this institution. She is a member of both Armed Services Committee and the Committee on Education and Workforce. She also serves as the freshman representative to the Policy Committee and heads the Millennial Task Force. Representative Stefanik was formerly Director of Communications for the Foreign Policy Initiative and worked in the White House as part of George W. Bush's Domestic Policy Council staff. Prior to her election, Representative Stefanik also worked at her family's small business, Premium Plywood Products, founded over 20 years ago in upstate New York. Welcome.
Thank you, Congressman Hanna. Am I good to go? Great. Good afternoon, Chairman Coates, Ranking Member Maloney, and my distinguished colleagues on this committee. It is truly an honor to participate in today's hearing and have the opportunity to discuss issues that are not only important to my constituents, but also to over 80 million other millennial Americans throughout our country. It is critical that we as legislators recognize the opportunity Congress has to support and empower millennials, the current generation between the ages of 18 and 33 years old. I look forward to sharing my unique perspective, both as a millennial and as a millennial member of Congress. Over the last year, I have chaired the House Republican Millennial Task Force. This task force aims to identify and tackle the issues facing millennials while also embracing the unique and innovative ways these Americans face challenges. I have chaired 3 hearings to date to address these goals and trust that what was learned will prove helpful to this committee. In June, the task force invited several leaders in millennial research and polling, including Mr. Meyer, who is here with us today. The hearing explored and delved into the demographics of millennials and identified key issues of concern. We learned that millennials make up 1 in 3 U.S. workers and have now overtaken Generation Xers as the largest generation in our nation's workforce. Additionally, millennials are the most educated generation in our history, while also carrying student loan debt far greater than our parents and grandparents. We also learned that a majority of millennials do not believe they will be able to attain the standard of living or the quality of life enjoyed by their parents. Our witnesses explained that this generation faces entrenched challenges to innovation and advancement that are the result of a federal government that has not recognized and responded to a changing America. In August, I held a field hearing in my district where I spoke to millennials from diverse fields, ranging from advertising to agriculture. These young Americans from New York's 21st District shared the hopes they have as they start their professional careers, as well as the challenges they face in today's economy. Ethan Allen, a millennial farmer who I represent, mentioned the regulatory burdens young farmers face as they look into entering the agricultural field. Other millennials who participated on the panel spoke of the crippling student debt that prevents them from starting new businesses, and also the crushing costs of healthcare that make it a challenge to save for retirement. However, what truly inspired and impressed me was the optimism and this new way of looking at the world which this millennial generation exudes. These are young Americans that strive for fulfilling jobs and care about their local communities. They do not shy away from challenges, and they want to participate in society, their communities, and in local government. However, often they feel held back by archaic processes and overregulation. As leaders in Congress, we can help with these challenges, and we can support and help grow our empowerment economy to allow young people to bring about economic change for themselves. Just this past Monday, I chaired the third task force hearing where we explored how companies are attracting and retaining millennials in their workforce, as well as how today's technology is providing flexible opportunities for millennials to earn money and advance their careers. I heard from Google and PricewaterhouseCoopers who shared their thoughts on the empowerment economy. Maisie Clark, a millennial from Google, pointed out how flexibility and competitive benefits are enjoyable, but at the end of the day, it is about empowering workers to succeed and live the lives they desire. Terry McClemens from PricewaterhouseCoopers discussed the real-time feedback system at their company that instills open communication and a sense of ownership among employees, 80% of whom are millennials. Another witness at the hearing was Uber, which is a great example of the empowerment economy. This company allows for flexibility and allows, for example, a full-time student to earn a living on their own schedule, or even gives a stay-at-home mom the opportunity to set her own hours and receive a paycheck to benefit her young family. By allowing Americans the flexibility to work the hours that fit within their busy daily schedule, companies such as Uber are creating the needed opportunities which are desperately desired by millennials. Although these task force hearings have primarily focused on the economics of the millennial generation, it is critical that we address the student loan debt crisis. I share the concerns of this committee and many of my House and Senate colleagues. When the most educated generation in our nation's history cannot start businesses, purchase homes, or save for retirement because they are held back by decades of loan payments, we must make it a priority to discuss innovative ways to address this solution. I am thankful to have been invited to speak to this committee today, and I look forward to an ongoing and productive conversation on how we, as leaders in Congress, can best serve the 80 million millennials across this great nation who will be our future leaders. Thank you.
Well, thank you very much. We appreciate that. We hope you'll be able to stay to take some questions from us. We understand when you'll need to leave. Mr. Meyer.
Well, Chairman Coates, Ranking Member Maloney, and other members of the Joint Economic Committee, I wanted to thank you for giving me the opportunity to give testimony on how to embrace millennials' vision of the American dream. I am a fellow at the Manhattan Institute for Policy Research and the co-author of the book, Disinherited: How Washington's Betraying America's Young. But don't worry, it wasn't any of you who are doing the betraying. So over the past 4 months, I've traveled across the country and I've spoken with millennials about the economic challenges they're facing and also their vision for the future. And millennials have been called the most entrepreneurial generation. While this may be true based on their desires to start businesses and their near universal respect for entrepreneurs, few young Americans have followed through on their entrepreneurial dreams. A Bentley University survey of millennials found that only 66% of over 66% of respondents have a desire to start their own businesses, and Deloitte found that about 70% of millennials envision working independently at some point in their careers. Yet, only 3.6% of businesses are at least partially owned by someone under the age of 30. This is the lowest proportion since the Federal Reserve began collecting data nearly a quarter century ago. Additionally, the Brookings Institution found that business startup rates are much lower now than they were in the 1980s. But these declines should not be surprising. Government policy, particularly in regards to regulation, is stuck in the 20th century and continues to hold back economic opportunity. The U.S. Code of Federal Regulations is over 175,000 pages long. The number of pages has steadily accumulated since the 1970s, but 5 of the 6 all-time high counts have occurred under President Obama's tenure. And in these pages, there are over 1 million commandments from Washington in the form of restrictive words such as must, cannot, or shall. How can we expect a business owner to comprehend which of these million restrictions apply to their businesses? It's simply a waste of their time. Financial regulations, such as the Security and Exchange Commission's restrictions on equity-based investment, can severely limit a startup's ability to raise capital. The Jobs Act of 2012, a law that President Obama touted as one of the ways he has aided millennials, included a provision to allow for equity-based crowdfunding. Debt or rewards-based crowdfunding were already permitted under existing law, but the SEC has still not implemented the equity crowdfunding rules, leaving entrepreneurs delaying their projects. And even if entrepreneurs are able to fund their businesses, labor regulations can prevent their projects from getting off the ground. One example of this is occupational licensing, which requires people to spend a substantial amount of time and money to gain government's permission to work. 1 out of 3 American workers now needs to gain government licensing or certification in order to earn a living, and this is up from 1 in 20 in the 1950s. It takes an average of 70 times as long to become a government-approved interior designer as it does to become a government-approved emergency medical technician. Additionally, the pass rate for the Louisiana florist exam, which is for florist certification, is only half as high as the pass rate for the Louisiana bar exam. These burdens vary across states, and licenses are rarely transferable if a practitioner moves. This disproportionately affects those who have to move to do a spouse's job, such as military spouses and mobile, often young workers. The negative effects on young people from excessive occupational licensing are one reason why President Obama's 2015 budget called for $15 million to go to states that institute common sense reforms to make sure that licensing keeps the public, not established companies and practitioners, safe. Further initiatives to curb states' desires to license young people out of work should be welcomed by federal policymakers. Other labor regulations affect the flexibility of entrepreneurs' hiring decisions. A recent Labor Department proposed rule would expand the numbers of employees who qualify for overtime pay. Those who earn up to $50,400 a year might have to be paid overtime, up from the current level of $23,660 a year. This would reduce flexibility for entrepreneurs and their employees. Telecommuting, which is another mainstay of startups, would also take a hit, since employers would have to keep close track of their employees' hours. Furthermore, the U.S. Department of Labor is making it more difficult for startups to hire contractors. DOL recently issued an administrator's interpretation to clarify the definition of independent contractor. But the problems for startups arise because this interpretation downplays an employer's lack of control over employees' hours as a determining factor for determining employee versus independent contractor. This means that more workers will be determined to be employees rather than contractors, and startups will be forced to pay up to 30% more, money they often do not have, to provide the associated benefits. The American dream may have once been finding employment at a large company, working there for a few decades, then retiring with a defined benefit pension plan. But now, millennials' American dream looks much different than that of their parents and grandparents. New opportunities to change or advance one's career are prioritized, and individualized, flexible work arrangements are the model of the future. Thank you for the opportunity to give testimony, and I look forward to your questions and continuing this discussion.
Thank you, and Ms. Mishory.
Thank you. Chairman Coates, Ranking Member Maloney, and members of the committee, thank you for the opportunity to appear here today. I'm the Executive Director of Young Invincibles. We're a nonprofit, nonpartisan organization that works to expand economic opportunity for young people in this country. Definitions vary, but according to Pew, there are 75 million millennials, and we're the most diverse generation in American history. So 57% are white, 21% are Hispanic, 13% are black, and 6% are Asian Americans. This compares to boomers, of which 72% are white. In 2013, 65% of 25 to 34-year-olds had completed some post-secondary education, and about a third of millennials are also parents. Overall, we're the most educated, the most tech-savvy, but also face deep financial challenges. When we interact with young people across the country, they tell us about struggling to attend school, find good jobs, raise families, and pay down debt. The recession accelerated trends that left millennials with critical challenges unlike those seen by our parents. First, we've seen challenges in finding employment. While young people have experienced job growth in recent years, there are several negative trends in youth employment further exacerbated by the recession. Unemployment levels are consistently above the overall level of joblessness, and this trend is even more troubling for young people from communities of color. Indeed, millennials are now the biggest generation in the labor force, yet they account for just 33% of employed Americans. And this can have long-lasting effects. Years later, workers who graduate during a period of high unemployment earn significantly less than workers with better timing. Second, we've seen wage stagnation and benefit reductions for this generation. Wages have actually decreased for millennials in the past decade almost twice as fast as the decrease seen by workers across age groups. Young people are disproportionately also more likely to work in sectors with lower wages. So median wages have declined or remained unchanged in the last decade in 4 of the top 5 industries employing most 18 to 24-year-olds. Other trends similarly impact this generation. 1 in 4 employed 18 to 34-year-olds is only working part-time. The rise of the sharing economy, while it does provide desired flexibility and entrepreneurship for some young workers, has also likely accelerated that trend. As a result, many of today's young workers lack key benefit wage and other workplace protections, and even consistent workplace scheduling when it is needed. Third, we've seen growing demand for education, but also growing debt. Research shows that by 2020, 65% of jobs will require some sort of post-secondary education beyond high school, yet affording college is just too hard. Since 1978, tuition and fees have increased over 1,000%, primarily due to a decrease in state spending per student. And state investment is down a total of 23% since the recession. As a result, student debt has ballooned. In 2014, 70% of grads left with an average of $29,000 in debt. Students tell us that their debt means delaying major life decisions, and a recent study indicated that student debt prevented $83 billion in real estate sales last year. Overall, the median net worth of young households is about $10,000, and that's a 41% decline from 1995. So it's clear, tackling these challenges requires action. First, we need to invest in quality education. Making education more attainable means that states need to reinvest, and the federal government can help to incentivize them to move in that direction. And Congress must double down on investments such as the Pell Grant and make it available year-round. Moreover, simplifying the financial aid process and providing students with clear information about which schools are providing good outcomes would give students a better chance to make decisions that are right for them. Congress must also address the quality issues at taxpayer-funded, poor-performing schools. We can do this through risk-sharing models or other means to incentivize schools that are doing well. Second, we need to help those with burdensome debt. Income-based repayment plans provide badly needed relief, and those should be scaled up so that those who are struggling aren't forced to pay back more than they can afford. Additionally, student loan refinancing and bankruptcy protections for those who are really in dire straits are common sense solutions. And those with debt need fair treatment from their loan servicers, and that's just not happening right now. Third, we need to do more to help youth who aren't working and who aren't in school. With 5.6 million opportunity or disconnected youth in this country, youth who have potential but have not yet been able to find a pathway to work, we must scale initiatives to reconnect them to education and job training, such as those funded through the Workforce Innovation and Opportunity Act. Apprenticeships also yield graduates with increased opportunity for gainful employment and a degree. Fourth, we must redesign workplace policies for today's economy. Policies that promote family economic security often benefit young people. So millennial parents are actually experiencing the highest poverty rate seen by any parents in the past 25 years. Young parents experience a series of unique challenges, including caretaking responsibilities and barriers to stable work and school schedules, as 25% of students are actually parents. Policies such as improving access to on-campus childcare for student parents and better access to paid leave could better support this generation now starting families. Despite the challenges we face, millennials are optimistic. It's up to us to make sure that perception of the future becomes a reality. Thank you for your time, and I look forward to the discussion.
Well, thank you, and I appreciate the testimony from our 3 witnesses. I'll just ask a few brief questions here and then turn to my colleagues. Ms. Stefanik, you indicated that despite the challenges that millennials face, and you named a number of them, there's a real sense of optimism. It's a bit surprising, given the fact that so many millennials have been labeled as working in less skilled jobs than the skills they have, saddled with a significant amount of debt, and no longer think that they can live the American dream or live the dream that their parents have been able to live. So I'm trying to reconcile, where does that optimism come from? Sometimes I'm wondering why there isn't more outrage on the part of a generation that has been robbed of the opportunity to live the American dream. Robbed, frankly, by the older generations, of which I am part of. Maybe Representative Hanna would be close to it anyway. Clearly, and you, Mr. Meyer, said that there are government policies that have betrayed the younger generation. But you said not from any of us. It's from all of us. It's from all of us who have held elective office and executive positions and presidencies. I'm not dividing between one party or another party. We have all failed dramatically to address the impact of running this country into ever more debt, of not making needed reforms to mandatory spending programs that are literally drying up all the issues without determining any kind of priority, good, bad, or indifferent, in terms of policies that have been mentioned by all of you. Unaffordable, because so much of our spending now goes to mandatory entitlement programs plus interest on our debt. And so you can talk all you want about, we can talk all we want about supporting students, more Pell Grants for this, more opportunities for that, more spending here, more education, et cetera, et cetera. That is being squeezed every year by our refusal to address the main issues here. So I'm wondering where that optimism comes from when these young people recognize that they're being robbed by older generations and, frankly, by their elected officials, both in the executive branch and in the congressional branch, that have refused to take steps necessary to address this problem and put them on a better path to living the American dream. We all ought to be ashamed of ourselves for falling to groups like AARP and others who scare the heck out of older people, knowing that we're running this nation over a cliff, and the biggest impact will be on the millennials.
Thank you for the question. As a millennial, I know I speak from personal experience that you can be frustrated simultaneous to feeling optimistic about the future of this country. There is no doubt that the issue of our national debt will rest on our generation's shoulders. Today, we know that our national debt is over $18 trillion. If we continue on this current trajectory, by 2025, it will be over $27 trillion. This is an unsustainable debt load that will continue to hamper our generation's ability to grow and create economic opportunity. But I did want to point to some of the other more hopeful indicators about millennials. Millennials actually volunteer in historic numbers, but they feel very politically disengaged. And I am about half the average age of a member of Congress. I think one of the lessons that I try to educate my colleagues in Congress is that we need to actively reach out to millennials to make them a part of the conversation when we're making public policy. Millennials have come of age during a world of government gridlock, during a world of partisan bickering, and we need to do better about educating millennials on how legislation that we're voting on today will impact their economic futures and the choices economically that will be available to them. But we are still hopeful. We live in, an amazing changing economy right now with the information age and growing companies like Uber that 6 years ago did not exist. So I think that hope is those positive disruptive ideas that are a result of supporting this empowerment economy with greater flexibility and increased entrepreneurship.
Thank you. Mr. Meyer, you want to comment on that?
Yeah, I would just say I think what millennials see is even in the face of government inaction, they see private solutions driven by entrepreneurs that really excite them. For example, the post office still has the same monopoly that it's always had, but we've allowed entrepreneurs to really innovate around the post office so we don't even need it anymore. If we look at email or with private chains that are coming in and filling in gaps in service, this is what's seen throughout the economy. As has been mentioned a few times, Uber, most cities still have in place their taxi cartels, where they have in place programs that taxis get a special monopoly privilege on picking up customers. But Uber has made those effectively, they don't matter anymore because they've had an entirely different business model that has superseded the existing regulatory structure. So I think that's why young people are optimistic and why they have such respect for entrepreneurs. Not only that they want to be them themselves, but they realize the great benefits that they've brought to today's economy.
And Ms. Mishory, I want to give you a chance to respond also.
I certainly agree with my panelists that young people are service-oriented, volunteer at incredibly high rates, and are entrepreneurial. I do think a lot of the investments that we can think about making are really smart investments. So, for example, we did a report a couple of years ago looking at the cost of youth unemployment. And it was actually costing the country $9 billion a year to have so many young people out of work. If we could actually scale up some of the innovations we've seen in connecting young people to training and jobs that will get them working, that's actually going to help grow the economy, get folks back to work, and actually alleviate that cost.
Well, thank you. I want to urge all of you to continue to support that optimism, which means you need to put a lot of pressure on us who are making these policies. On straightening out our debt so they have a better future, on not burdening them down with regulations that are just no one can even begin to keep up with, so that they too can come to a point where they can have the same American dream that we've had, and that our parents have had, and many others who have sacrificed for the future of this country. We're not seeing that sacrifice right now being we don't need more handouts, as you've said, in my opinion. We need more empowerment. We need to give you a reason to be optimistic. Congressman Maloney.
Thank you so much, and welcome to all of the panelists, and especially Representative Stefanik, who's from the great state of New York that I also have the privilege of representing. And my late husband's home was in your district, or family home was. So I'm very familiar with that area and why you're so devoted to climate change and other environmental issues. I was very interested in your testimony that you chair the task force for millennials for the Republican majority, and your statements on flex time and how helpful it is for companies to look at it, and giving the example of Uber that allows young mothers and students to work and also pursue their careers and their education and their children. So I would like to ask you to look at a bill that I've introduced with Senator Casey on flex time, which follows the model of England that allows flex time and is not mandatory but protects workers that approach their employers for flex time. I think it's flexible and good and could respond to the challenges that you pointed out in your testimony. Also, I was interested in your support for climate change. You were an original co-sponsor of a resolution recently introduced in the House that noted that the dangers of saddling future generations with costly economic and environmental burdens. And I'd like to hear your thoughts on what should be done to address climate change, and isn't failing to act on climate change imposing additional burdens and costs on your generation?
Sure. So I welcome the opportunity to review your legislation on greater flexibility in the workplace. So the concept that Uber discussed, as well as PricewaterhouseCoopers, I think what makes them unique is that they were essentially ideas that came from the workforce and the companies themselves. So PricewaterhouseCoopers talked about how they were able to model a flexible, flex time that was responsive to what their workforce said they were looking for. So the needs of, for example, single parents are very different than students who are maybe pursuing their graduate degree or taking extra classes outside. And I think the key for me is providing flexibilities for companies, for policies that work to continue to promote millennials and provide economic opportunity for millennials to grow. In terms of my original co-sponsorship of the resolution related to climate change, I represent New York's 21st District. The health of our environment is critically tied to the health of the economy. But in terms of policy making, we have to find a balance in addressing this issue that is not crushing jobs and creating overly burdensome regulatory costs. I think we need to have this conversation going towards the future, but I believe it should not just be one-sided. And when I talk to millennials, their key concern is getting a job in today's economy. And we need to make sure policies and overreaching rules aren't crushing our jobs today. But that conversation needs to happen.
I would say you represent one of the most environmentally beautiful districts in the country, and I look forward to further conversations on these two issues. I'd like to ask Mrs. Mishory, the oldest millennials were 27 years old and beginning their careers when the Great Depression hit, and the impacts on their employment, income, and wealth have been painful. How has the Great Recession affected the employment and earnings prospects of millennials, and are these short or long-term impacts on their careers?
Well, the recession certainly hit millennials the hardest, and so we're seeing a generation who graduated at a time when they couldn't find work, and they couldn't find work at higher rates than other age groups. And research does show that those effects on wages can last for as long as 15 years, perhaps even longer. So someone graduating at a time of recession will see that impact over time. So I do expect that those folks that have graduated during that time period will see that for a long time.
And millennials are also less likely to own their own homes and more likely to live at home with their parents than previous generations. And is this explained in part by the difficult economy which they have inherited?
Sure, and folks ask that question a lot, and most young people don't want to be living at home when they're 25, 26, 27. It's not a choice. I mean, we're talking about people who are trying to find work, trying to save up, and whether it's save up in the rental market that they happen to live or to be able to purchase a home. I think those challenges are reflective of a confluence of issues. So we're seeing either declining or stagnant wages. We're seeing people that graduated during the recession and couldn't find a job. And then we're seeing folks that have student debt. And we've seen poll after poll, study after study show that having student debt is impacting the housing market. And as I mentioned in my testimony, we're starting to quantify the billions of dollars in sales that it's actually holding people back from. So absolutely, and I'd say finally, when it comes to home ownership, it's also a generation that saw their parents lose their homes, and I think are going to be perhaps a little bit more reluctant to jump into the market.
My time has expired. Thank you.
Thank you, Congressman Hanna.
Thank you. As we know, we can agree that college is more a necessity than ever, but it's also a choice. College debt is a choice that people face, and a choice that I think they have to make. And speaking to Uber, you may want to talk about this, Mr. Meyer, but right now, it's the income from as using for someone who runs a Uber business, they're asking that it become W-2 income. Are you familiar with that? I think that's in California, to be precise. But I want to ask you about something that Senator Coates referred to, and that is this notion of intergenerational theft. Because while I agree with that, and I agree that we have this enormous debt and slow growth, a lot of what Ms. Mishory talked about would actually add to that, respectfully. Pell Grants have grown exponentially in the last few years. I think they're around $35 billion. And some of the other programs, the state-funded education, all of those kinds of things add ultimately to this problem. So, I mean, you have a bigger problem than we do, right? And we're piling on. So how do you reconcile that with, and how do you feel about the term intergenerational theft? Because it's curious to me that we use that because it's benefiting our parents, me soon enough, you know. Anyone? Elise?
Thank you, Congressman Hanna, and my good friend from upstate New York. I think our national debt and our budget crisis in this country is a generational issue. That's how I talk about it with my constituents, most of whom are seniors, and they fear for their kids and their grandkids' future. I wanted to refer back to Senator Klobuchar's initial statements that it's not only the national debt, which is going to be a huge challenge for my generation, but it's also our savings crisis on an individual basis. The fact that millennials are facing the crushing debt of student loans, they're pushing off pursuing home ownership, and they're not saving for the long term. We are going to be the generation that will, hopefully be there to support our parents as they become seniors, and we will probably become caretakers, and we'll have to make some of those, we'll be making those decisions, but also, providing the economic support for our parents as they live longer. So I think the savings crisis and promoting financial literacy and promoting more awareness of millennials of the importance of saving early will be beneficial. That is completely aside from our national debt, which of course is a generational issue.
Well, Congressman Hanna, I want to thank you for bringing that up, because I actually just had a report released yesterday through the Manhattan Institute describing entitlement programs as programs that steal from younger, poor Americans and give to older, wealthier Americans. And the reason we haven't seen reform when it comes to entitlements is older Americans view it as if they deserve these benefits. But if you look at what a typical senior who retired between 2000 and 2010 will receive in Medicare, it's about 3 to 7 times more than what they paid in, even taking into account the possibility that they would have gained investment income if they were allowed to.
But for over a third of the people on, say, Social Security, it represents about 90% of their income.
Yes. Yeah,
so your alternative is to push them into abject poverty?
I don't disagree with your number, but I think that's looking at the wrong picture. If we're looking at income, it's only looking at part of the picture of older Americans. Very few are working, so of course they're not receiving much income, but the wealth levels have grown drastically if you look at young Americans versus older Americans. In fact, the average household wealth for a household headed by someone 65 years or older is 50 times greater than the average household wealth for a household headed by someone 35 or younger. And this was only 10 to 1 in the mid-1980s. So if we want to talk about increasing income inequality, the increase between the oldest Americans and the youngest is something that we need to be looking at when we talk about entitlement reform.
But arguably they had a lifetime to earn that, too.
Yes, but it has been increasing at about 5 times.
Ms. Mishory, with 30 seconds left I have.
I think that the word intergenerational theft isn't necessarily the way a lot of young people look at it. I think that as we're thinking about these safety net programs, young people are thinking about their parents, their grandparents, and themselves. So I think young people do take a more nuanced view to it.
So it's a bigger crisis than just your generation. It's all of us.
I think young people are generally supportive of ensuring that these social safety net programs are there in the long run, but also there for their parents as well.
My time's expired. Thank you, Chairman.
Congressman Meyer.
Thank you, Mr. Chairman. And Congresswoman Stefanik, so much of what we've been talking about is how government has messed up and created these conditions and what government should do. And yet I heard this morning that only 12% of millennials are registered to vote. By the way, old people are really good at voting. Mr. Meyer. Ms. Stefanik, what can we do to inspire people born between 1980 and 2000 to actually participate in the political process?
Thank you so much for the question. I think that particularly as members of Congress, we need to constantly reach out to millennials, whether that's going to college campuses, whether it's going to training and development programs, preparing our workforce to talk to them about why policies are relevant. The other interesting statistic that is somewhat related is recently Time Magazine found a poll that 89% of millennials are not interested in running for office in the future. This is, again, that disconnect between the historic numbers of volunteers among millennials versus they don't connect that to public policy and the importance of making sure that their voice is heard. We need to change that as an institution. I am, very concerned that unfortunately we will not have the best and brightest wanting to run for office at the local, state, or federal level, and we need that here today. I've been in Congress for less than a year, and we need the best minds possible from diverse backgrounds from all across these very different districts to solve these generational issues we face.
Great, thank you, Elise, very much. Ms. Mishory, Isabel Sawhill over at Brookings wrote a book last year about marriage in the United States. Instead, if you draw a straight line, by 2050, no one will get married in the country. And we're already seeing this right now. The generation of my kids, nieces and nephews, are all waiting and delaying. Should we be worried about this? What can government do about this? What does this mean for population growth in the years to come?
We're certainly seeing the data play that out. So young people tend to get married later, tend to have kids later. I think that there may or may not be some cultural decisions and sort of more having to do with the culture of this generation, but I also think there's a lot of economics going on here. So a lot of financial decision making, and going back to the issue of student debt, we see over and over again young people polls telling us that young people are delaying those major life decisions because they have debt. So they can't save for that down payment. They can't save to have a kid. We've talked to student debtors who say, there's one woman in particular who told us, I found out I was having my first child and I couldn't get excited because I didn't know how I was going to afford it because I had all this student debt. And so it's really impacting young people in some very major ways.
Great, thank you. Mr. Meyer, I was fascinated by so many of the things that you said that I actually disagreed with, but I respect it. But one of the things I want to point out to you, you talked about barriers to entry. I was in the Virginia General Assembly for 8 years, and every business bill I saw for 8 years created by business was to create a barrier to entry so that other businesses couldn't compete against them. So it's not government so much necessarily that's doing that, but businesses themselves. For example, on credit, every person I talk to wants to borrow from a bank says, as long as I don't need the loan, the bank will give it to me. They're sitting on enormous amounts of resources that they won't lend out. Occupational licensing. We're a federal agency. Occupational licensing is almost completely done at the state level. So should there be federal intervention on licensing?
I think, first of all, I couldn't agree with you more that more often than not, regulation has the fingerprints of big business on it. People who want to use the government to keep out new competition by raising the barriers.
By the way, small business too.
Yeah, that's true. But I would say when we look at occupational licensing, this is something that I'm glad that President Obama has really taken the lead on, where he's released a framework for policymakers and also calling for the amount going to the states that institute successful reforms in his budget. I think it's something that has gotten so bad now, again, 1 in 3 workers needing government permission to work, up from 1 in 20 in the 50s, that it does need some sort of federal involvement or at least federal prodding, where we're saying to states, you need to take a long, hard look at your list of licensed occupations, and when you see things such as African hair braiders or interior designers or florists on that list, you need to take a look at who's being protected, companies or the public.
And one last thought, thank you very much. On the federal contractor issue, the 6-part test, I think it's really important to see the other half of the story, which is employers who bring people on board to do a job full-time and treat them as contractors, and just so they don't have to pay benefits or Social Security or unemployment compensation. At the same time, in virtually each of those 6 parts, they actually are employees. And that's what they were trying to protect.
Okay. I would just say, looking at the rise of the sharing economy, this is something we need to encourage, the flexibility and individualized work model. And if it is allowed to go forward as it is stated right now, I think this will put a major threat towards the sharing economy's business model.
I know my friend Senator Mark Warner is worried about this a lot. The dilemma with the sharing economy is that at the same time, do you want to strip away rights that employees have had for more than 100 years in this country to things like Social Security contributions.
Thank you, Mr. Chair.
Congressman Paulson.
Thank you, Mr. Chairman, and I want to thank all of our panelists for being here today. It's been really good testimony, actually, and as the father of 4 daughters, 2 of whom are millennials, I guess, this kind of strikes home, and you know, I'm worried about the challenges they face. I'm also optimistic about the opportunities that they have and that their generation and your generation can certainly achieve. And as we've learned in this committee, I mean, there are some challenges facing this generation for sure. I mean, in the 5 years it took in the economic recovery since the recession ended, it took 5 years just to reach the starting point in terms of making up for the number of jobs that were lost. I mean, that's never happened in our country's history before where it took that long. It's also the first time ever in an economic recovery where incomes have declined, medium household incomes. So they've certainly got some challenges that they're facing as they enter the workforce and as they've graduated and they have to retire student debt. But Congressman Stefanik, let me just start here. I think you're uniquely qualified to answer this question, obviously, because your testimony covered some of the challenges, the opportunities facing millennials generally, but I'm hoping you might also just share a perspective specifically on the challenges and opportunities that millennial women face, and what should we be doing here in Congress to help address some of those unique challenges, perspectives?
That's a great question. If you look at millennials, women are the majority of college graduates today. That certainly was not the case if you look back to our parents' generation. Also, increasingly, women are the primary breadwinners in their families. So the economic decisions that are made by a family are increasingly made by women. I think that it's incredibly important as policymakers to reach out to our female constituents, all of our constituents, but specifically talk to people who are making those decisions in family, which is more and more falling on women's shoulders. I know, from a freshman member of Congress perspective, much of the casework that I focus on in my district, when I hear from seniors who are facing challenges related to Social Security, Medicare, or appointments through the VA, we usually hear from their adult daughter who is helping them go through the federal bureaucratic process, and they're trying to overcome some of the challenges that the federal government has placed in their way. So I think recognition of the growing importance of women in our economy today, that the broader economic success of women is directly correlated to the economic opportunity for our country's future.
And I'll let all of you comment on this because you've all mentioned how the workforce has changed significantly from the time when many of us were first entering it. And millennials entering the workforce, they hold very different priorities and values in terms of that flexible schedule, that time off that some other generations didn't care as much about, for instance. You talked about Uber and Price Waterhouse, for instance. And in the House, we've passed legislation in the past, the Working Families Flexibility Act, which will allow employers to offer private sector employees time off in lieu of wages, for instance, for overtime. And give them that choice, for instance. Maybe each of you can just give a comment about how should millennials' priorities guide our thinking as we consider other future legislative initiatives like that or other initiatives.
Yeah, so you're referring to the Working Families Flexibility Act. I am a proud co-sponsor of that legislation introduced by Congresswoman Roby. I also think, what I've learned in the Millennial Task Force from the perspectives of companies who are trying to attract and retain millennials, it's the ability to create a program that's flexible to work within your company. So not this one-size-fits-all approach, because if you have thousands of individuals in your workforce versus a small business like my family's plywood distribution business, you're not going to be able to have the same government-mandated approach. I think we should be encouraging that flexibility for companies, again, to attract and retain millennials.
Mr. Meyer?
Well, I think one of the things I worry about when I see the new proposal to raise the overtime limits are that a lot of companies that don't fit into the target are going to be affected. So what people are looking at mostly when they're pushing to raise the overtime limit are fast food establishments. That's what they're looking at. But they're forgetting about the large number of startups who they either pay their employees in equity, and few of them are paying entry-level employees over $50,000 a year. So now things, as I said, such as telecommuting, you're going to have to keep much closer track on your employees and not have the option to offer flex time or comp time in addition to working longer hours, which I think is something that young people, actually I know it's something that young people are very interested in.
Ms. Mishory, yeah.
I would certainly reflect similar comments around flexibility. Young workers do value flexibility. much more than previous generations. Young workers also tend to value the mission and really working for something they believe in. That might be sector agnostic, doesn't mean that they need to work for a nonprofit, but really wanting to make sure that they're making a difference. And those types of things show up again and again in polling. I do think that as we're talking about flexibility, it's important to note specific issues facing young families and young parents. So for example, access to paid leave, paid sick, to be able to take care of a child who gets sick and be able to also hold their job is critical for young families.
Thank you, Mr. Chairman.
Thank you. Senator Cassidy.
I thought you were going to the other side. I'm sorry. Representative, thank you for instigating and inspiring this meeting. Thank you all. Frederick Hayek would be very pleased with your testimony, Mr. Meyer. The regulatory agency co-opted by the businesses. Let me ask y'all. The Fed came out recently, the New York Fed recently came out with how college education, 25% of those in the lowest quartile really don't do that well relative to those without a college education in terms of income. Now, we've been hearing a lot about the burden of student loans. And to a degree, it seems like everybody advocates greater transparency. The student who is taking on the debt should know this particular degree is more or less likely from this particular institution to usher me into prosperity or to keep me chained to debt. With me? I'm not really sure how to accomplish that. The federal government, I think, has just kind of thrown in the towel. So whatever thoughts, what are y'all's thoughts? Do you think there'll be an appetite for that high school grad to be able to look on and see that St. John's, if you graduate from there, you're going to be testifying before Congress, but perhaps someplace else, maybe not? I open that up.
Well, luckily, the data is now publicly available, but it's not that accessible at this point. So you can look on the college report card. It's actually something that came out about 2 months ago, a public database that the White House put together.
Now, as I gather, though, if you can go to one university and get a degree in gender studies and really have no option but maybe grad school, you hope, and from the same place get a degree in engineering and have 6 figures as your first job. Does that, I don't think that database necessarily differentiates between programs within the same college. Am I correct on that?
Well, that, and then also there's been quite a wide variety of academic research where they've looked at Bureau of Labor Statistics data on this, because they started asking for the 2010 census what your major was. So people are actually able to see this now, but I would agree with you that it's not that accessible to the public yet. So while it's out there, people in policy and people in government may be able to look at this, but your typical high school senior, they're not going to be out pouring through these databases. So something to make that more accessible, I think, would be welcome to try to turn around the trend.
Now, if it were accessible, would it therefore be accessed?
I think it would, because right now, data that's often not mentioned is that 4 in 10 college freshmen still don't graduate within 6 years. So we're pushing a lot of students into a 4-year college where they don't know what they want to study, and they don't realize that while college still...
Now, that's a different issue than the quality of the education. I mean, if you go to, a for-profit, which some are good but some are bad, and some are going to charge high tuition, and et cetera, and you're going to end up with a degree which is not worth very much. That's different from not knowing what degree you want to end up in.
That's true.
One is a lack of maturity, and the other is a lack of a quality option.
I do think we're still missing a lot of that data. So we do have more of the school level data that was released in the last few months. We don't have the program level data, which is what I think you're getting at, and information that would be critical. So when we hear from young people about how they're thinking about schooling and higher education, they're interested in finding a job. And they're interested in bettering their lives.
So if you put a different question, if you go to this school with this degree, you're more likely to have a job, and you're more likely to have this sort of debt load if you finish in 4 years, this if you finish in 5, some sort of algorithm they can plug in their plans?
Yeah, I mean, we don't provide that information right now, and we certainly don't provide it in a way that is accessible for students and families to make decisions about.
Okay.
I serve on the Committee on Education and Workforce on the House side, and this is an issue. To answer your question, would young people access this information? Absolutely. I think greater transparency in the job opportunities after you graduate, what the median income over the next 5 or 10 years or even a lifetime would be. I think we'd have millennials looking to pursue higher education degrees that will be more likely to lead to jobs. But I also think that we need to have a discussion about financial literacy when young people decide to take on these student loans so that they can connect their debt burden with their job potential afterwards with the data that you just recommended.
Okay, so it's actually a little bit, for those who lack the maturity or the financial literacy, you can't ensure that they would use this data accurately and adequately, but nonetheless, the first thing you have to provide the data. Fair statement?
I wouldn't call it a lack of maturity.
No, I just say that because, believe me, I'm very aware that some people start college and change majors 3 times, and they end up in what they really want to do, but when they start, and to me, maybe we're just defining it differently, but we probably both know folks like that, huh? They think they want to be a doctor and they end up a lawyer, or vice versa.
And I think having that data about what, for example, their annual salary will be after they graduate, what percentage of graduates from a particular program are able to find jobs immediately or in the first 3 to 6 months, having that information will ensure better decision making for an individual's future. I also think we need to rethink how we provide higher education today. So the average college student looks very different than the average college student of 20 years ago. They're slightly older. Oftentimes they're a single parent. Increasingly they're veterans, and they're therefore older. We want to encourage a faster finishing your higher education degree faster than what you referred to, Mr. Meyer, as staying in college for 6 years. So one of the bills that I've introduced is flexible Pell, year-round Pell, so that you not only can apply as a student for fall and spring funding, but that crucial summertime where you may want to continue pursuing your education so that you can graduate earlier and hopefully not to continue to increase your student loan debt.
Thank you. Yield back.
Senator Hyrich.
Representative Stefanik, first off, I want to thank you for your efforts on flexible Pell. I share that view, and I think it's particularly important in states where we have a lot of non-traditional students who need to be in school in summer and who need to finish as quickly as they can. So I would applaud your efforts on that front. I want to talk a little bit about the issue that came up earlier of climate change, and given the fact that my generation and previous generations have created this issue, which we are now shifting the burden for coming up with a solution squarely onto the millennial generation and generations that come after millennials, like my kids, effectively imposing a tax on GDP productivity in the future. Oftentimes, as you know, that conversation you were talking about gets bogged down into regulatory and policy issues versus innovation and R&D issues. I'm just curious if you have thoughts about what some of the private sector solutions are to addressing climate change that you're excited about.
Sure. So in my district, we have a number of exciting I think, ways to help solve this generational issue. One is biomass. Biomass is a growing sector in broadly the Northeast, but specifically in my district. It's affordable, and it helps address, I think, the long-term environmental challenges. I also think that, one of the key points that I didn't state before is this is a global issue. This is not an issue that the United States can go it alone. We need to reach out to countries like China and India to make sure that they are a part of the solution. But I absolutely agree that we need to get beyond the issues of regulation and actually talk about where we can innovate and where we can invest in research and development.
One of the interesting innovations that we've seen, and we were talking about how sometimes businesses like to put up barriers to new innovative businesses coming in and changing their business model. I grew up in a utility family. My dad was a lineman. But utilities had a monopoly, and today we're seeing people become their own power generators, not only with distributed renewables, but also by utilizing things like plug-in electric vehicles and other storage devices on the grid. Do you have any thoughts for, with regard to that particular dynamic and what sort of policies we should have in place to allow those innovations to continue to change the business model and change the market?
I think innovation is good for the economy. I think it's important to recognize as a country that, the population density is very different. So I represent a very rural district. Many of my constituents are driving, over an hour to and from work every day. So we don't necessarily have the infrastructure to pursue that the way potentially urban districts are trying to pursue this type of innovation. But I'm, as a millennial, I'm a believer in innovation. I think that if the government gets out of the way, there are lots of ways to solve this issue in the private sector and with technology companies and renewable energy.
Thank you. Ms. Mishory, I want to sort of switch gears real quick since we have the potential for seeing a highway bill emerge from the Congress in the future weeks. And one of my frustrations is that we've gotten away from basically paying for things around here. It's become more and more politically difficult for many of my colleagues to honestly pay for things. And not only are we not funding infrastructure, new infrastructure, brand new infrastructure going forward at the rates that we need, but we're not really even having the decency to maintain all of the infrastructure that previous generations have built and given to us. And we've been coasting on that infrastructure for a long time. So how can Congress support and improve? Let me back up. One example I'll give you is there's talk about how we're going to pay for the current highway bill with things like we're literally asking community banks for a stake in paying for what is effectively a transportation infrastructure piece of legislation. So what should we be doing on the infrastructure front in a way that honors the previous investment that generations have made, but at the same time providing the millennial generation with the foundation for success that they deserve?
So it's interesting, we're actually running a series of roundtables with young workers in Houston, Texas. We have an office down there to hear about the challenges they're facing in the workplace. So finding jobs, wages, et cetera. And this issue of infrastructure has come up because young people are actually having trouble getting to work, getting to interviews, being able to actually engage in the workforce because of the infrastructure problems that they're seeing. So I think it's an interesting issue that's impacting young people in a variety of ways.
Thank you, Senator. Congressman Schweikert.
Thank you, Mr. Chairman. Can I pass down just a couple of these the slides? And I lost my representative. Oh, fine. The one question I had for her. One of the reasons I was passing out this chart, we've had the discussion bounce back and forth, and I think the proper term is cross-generational wealth transfer, but how quickly some of these numbers and what they do to your future position in the world. Mr. Meyer, when you hit, and I'm going to assume right now today you're in the top tax bracket, when you hit my age, your tax bracket, it goes from 35 to 66%. And that's just your federal income tax. That may not be the supplements that are required to deal with Social Security Disability, Medicare. And that's baked into the numbers. That's not one we get to fudge. That's not one we get to walk away. So someone who's in college today, when they hit their peak earning years, their federal income tax will be double what ours are. And we've done this to the generation following us. And that's the basic math. And there's a question built into here, and that's how do you activate millennials particularly to understand the structural, you call it structural deficit, structural financial destruction, in many ways our fiscal policies have done to them. A good example is, and I'm going to, Mr. Chairman, without objection, I'd like to actually put this report into the record. I, as a baby boomer, when I retire, I'm going to be about $250,000 plus on the earned social benefits I receive. A millennial, you're basically going to be about $180,000 upside down, where you're going to pay out more taxes by about $183,000 than you're going to receive. But when I hit Social Security, Medicare, I get $250,000 plus side. And this is what we've done structurally. Do you run into millennials that understand what we've done to you?
I think what we see is millennials realize that Social Security especially is facing funding problems, and actually a majority of them don't think they're going to get any money back at all, which isn't true. But what's surprising is they still have pretty vast support for the program because they realize that there are certain retirees who need
But do they support the concepts that we have to rebuild them, redesign them, and almost immediately?
Yes, they do. Actually, 7 in 10 millennials view private accounts as something that should be pursued for Social Security. You can't even find a group of 7 in 10 Republicans who would view that. So I think millennials realize something needs to change, and I'm glad you brought up the tax increases, but what I found is the most effective way to show that young people are going to be paying a lot more for Social Security is bring up that if nothing changes, in 2050, people will be paying a 31% payroll tax. So ignoring the income tax, ignoring all your housing or rent payments, you're going to be losing almost a third of your hard-earned income just to cover Social Security and Medicare.
I actually didn't have the charge for the payroll tax.
Certainly, millennials are interested in ensuring that Social Security is there in the long run. I think
But the real 10,000-pound gorilla here is actually not Social Security, it's actually Medicare.
And I think when we look at polling to see where young people's priorities are, there is support for those social safety net programs and ensuring that they're there for the long run, and ensuring that they're there for their parents. So I think there is interest in ensuring that those programs.
But when you hold because you hold forums and seminars, and do you get feedback of any understanding of the scale? Okay, it's one thing to say, I support there being the earned social, entitlements, the social safety net. The understanding of the scale of how out of whack the numbers are.
I do think that there's, and again, there's looking at polling and research data, there's certainly interest in ensuring that there aren't benefit cuts in the long run. That's the sort of research that we've seen to make sure the programs are there for their parents.
But once again, how do you make that math work? I mean, at some point, math is math.
Sure. I mean, I think that when young people are looking at how these programs are being here in the long run, looking at some modest changes to make sure that they're there is something that I think young people would be interested in talking.
Modest changes, don't shore it up. Don't come close. Okay, look, Mr. Chairman, obviously, I'm hoping the panel members get a chance to read over the report and some of the actual numbers. There is something very creative that this committee could focus on. I know we care a lot about the earned social entitlements being there in the future, but we're also entering the world of the new economy. Are we going to have to rethink how you fund these programs? If I live in the world as an Uber driver, is there a sliver on each Uber fare that goes to the social entitlement accounts? We're going to have to rethink the future, because the new economy, the hyper-efficient economy where we're all carrying a supercomputer in our pocket, is changing things around us very, very fast, yet we still have sort of a 1930s mindset on how we fund, these government programs. And I'm hoping somewhere here, one of the gentlemen on the end was being actually very creative on what the future should look like. I think we're going to have to all do that. And with that, Mr. Chairman, thank you for your patience. I yield back.
Well, thank you. This has been a most interesting subject with a knowledgeable panel. We have a little bit of time. If any of the members here have additional questions, this is the time to ask them. Ranking Member Maloney, Congressman Meyer, everybody's got work to do. I think the most important thing I take away from this is that we need to delve into this, as Congressman Swigert said, into a much more detailed hearing relative to how we're going to address this coming over-the-cliff fiscal situation and the impact that it's going to have on the younger generation. I'm glad to hear that some of them are thinking about this, but when I hear things that young people are concerned about taking care of the older generation, it makes me say, shouldn't it be the other way around? Shouldn't the older generation, which is benefiting way beyond what they've contributed, be worried about what's happening to the younger generation? So that's an issue that needs a lot further discussion. I want to thank our witnesses and panel for being here. Most interesting, and as I'll include Congresswoman Stefanik, as millennials, you certainly brought us a good deal of information and a good deal of knowledge, and we encourage you going forward in the future to help us work through these very challenging issues. With that, this committee hearing is adjourned.